Countries across the globe are grappling with rising inflation after the COVID-induced disruptions in global supply chains and the reopening of world economies accelerated demand for commodities. Egypt is the latest country to report a jump in annual headline inflation, which rose 2.6%, driven by an increase in price of food and beverages. Many Egyptians are beginning to feel the brunt of rising costs.
The prices are increasing in everything: vegetables, fish and fruits, tomatoes, rice, eggplants. Nearly everything has gone up.
Everything is rising. Chicken, meat, vegetables, all food products have increased a lot. I used to buy 2 kilos of meat every other week, but now I buy one once. The same is happening with eggs, cheese and other food because they are overpriced.
After hitting 7.3%, the highest annual urban inflation rate in 2.5 years, there is concern that the rising costs threaten to weaken the purchasing power of Egyptians and slow down economic activity and growth. However, experts say the inflation rate is still within the safe zone.
Inflation is still in the target set up by the central bank, 7% plus or minus 2%. We are still in the IMF target range. We did not exceed 9% till now, so the central bank will keep interest rates at the current levels in the next session.
Egypt offers one of the most attractive rates in the international debt market at 8.25%. But analysts expect more activity by the central bank in the next few months to counter expected inflation hikes.
In the second half of 2022, after the US Fed raises rates, the central bank will have to increase interest rates as well. First is to face the expected rise in inflation and not to lose investors who will exit Egypt to buy US bonds. The US Fed decision to raise interest rates could also push the local currency down by 15% in the first half of 2022.
The Central Bank of Egypt will be monitoring developments for now, but it might be forced to intervene in the second half of the year. And that's in a bid to sustain the Egyptian pound's value against the dollar and to control prices of food and basic goods from the expected inflationary effects of the US Fed's monetary policy tightening. Yasser Hakim for CGTN, Cairo.